and Dale, thank you for always being with us and providing the great interviews. Although I am going to take the helm today because I have a special guest, Ronnie Schlapfer, which is something I've been looking forward to.
Blake.
Yeah, thank you very much, Dale, and thank you, Stelios, as well for being here. And I know our entire team is listening in right now, and so thank you all. Now, before I get started, and I'm going to bring over Ronnie. I saw him in the attendees. I just got to find him again because it's a long list, and just got to get over to his name. I want to tell you a little bit about Ronnie in my experience, and this gentleman, and for those of you that weren't listening in a little bit earlier, he's a guy that I've had the pleasure of meeting and becoming friends with, and really looking at him as a mentor over the last several years, and being able to trade with him.
Sorry to interrupt, Blake. I already did that for you. I found him and promoted him to panelist. Okay.
Okay, thank you. And I want to just say what a great and how excited I am to have Ronnie here with us today. And he's been an incredible influence in my trading, especially over the last few years that I've known him. And I know he flies very much under the radar from a social media standpoint. So many of you wouldn't know who he is from Twitter or anything else, but most of you know him from the $1 Billion Day documentary. And when I was talking about him a little bit earlier when I did my analysis, on the euro and all the other pairs earlier today, Stelios chimed in. And he said, when I first started at Barclays, and this is 20 years ago, or however many years ago it was for Stelios, 16, 20 years ago. He said, read the Market Wizards book, the Jack Schwager book, watch the BBC documentary, The $1 Billion Day, and go watch the documentary of Nick Leeson. Come back and see me tomorrow. That was it. And there are every person that's been in the FX market for any length of time knows that the $1 Billion Day is really it's a staple for all of us to have watched, and many of you, and I would say even most of you, have watched. So without further ado, I want to bring on my friend. I look at him as a mentor, Ronnie Schlapfer. Good morning, Ronnie.
Good morning. Can you hear me?
Perfectly fine, and so glad to have you here today.
Thank you.
It
was not easy, but you tried very hard to get me here. I normally wouldn't do that, but now while I was listening to you guys and thinking about my career over the last 43 years, I was just realizing how everything changed and different, and all the people I met through all the years, and if if you want to know how I started and and got here where I am right now, at the golden age of 68, I can do that. Or we can talk about markets or about trading, or you tell me what you want me to do.
Well, first and foremost, we'd love to hear how you got started in this business. But I want to say that having you here is such an honor, and really. And for the people that were listening in a little bit earlier this morning, I told them how we met, and we don't have to go through that story, but it's actually a quite funny story.
Yeah. You were hard to get. You were very hard to get.
I was playing a little hard to get, but that was because I was just being more of a dumbass than anything. But anyway, I want to say that the knowledge that you have about the markets is unparalleled, and the experience that you have by far exceeds 99.9% of the people that are really trading the market. So I think what most people would love to hear is really how you got started and from the beginning, how you got started and how you got to where you're at, because I know the story, obviously, as being you friends with you, but it's an amazing story to hear. So could you enlighten us and let us know how you kind of got here?
Yeah, absolutely. I grew up in the Swiss mountains. It's a city quite famous. It's called Davos. You have the World Forum there every day. So I grew up there. Obviously, 7 months a year we have snow, or at that time we had snow 7 months a year. And, all you could do up there really was skiing or playing hockey. And I decided to concentrate on the ice hockey. And I became a professional ice hockey player in like 1968. And my parents, they want me to have some education before, so I made a bank apprenticeship at the Cantonal Bank in Davos. That was when I was between 15 and 18 years old. And when that was done, I started my professional hockey career. And I played in about 4 teams in Switzerland: Bern, Zug, Zurich, and Lausanne, where I learned the French speaking for 2 years. And so I did that, and then when I was playing in Zurich, one of the big sponsors was Citibank, and the president of Citibank, and he was also in charge of trading, foreign exchange trading in Citibank. And Citibank at that time was pretty much the biggest bank in trading in the world, Citibank in Zurich. And so he said to me, listen, it's nice and good for you to play in the afternoon and hang around in the evening. You should do something in the morning. I want you to come to work for Citibank in the morning in the foreign exchange trading. And so eventually in 1974, I started trading in the mornings with Citibank, and then in the afternoon I went and trained, very hard training for the hockey. And then, after a year, 1.5 years, they didn't have enough people because Citibank was getting bigger and bigger in trading. And then they had me stay there until 2 o'clock in the afternoon, 3 o'clock in the afternoon. I missed trainings, and then it became a problem. And then he said one day to me and said, listen, you have to quit hockey and you have to work full time for Citibank, and you have talents, and blah, blah, blah. So I quit hockey, and then I became, a full-time employee of Citibank. And, at that time, it was very, trading was like kind of crazy. There were no charts, there was nothing. There were just flows and speaker boxes from the brokers. And you had to have it's buying Swiss franc, selling Swiss franc, and, play a lot in the yen also. But it was just pure trading flows. The bigger you were, the better you were able to move the markets. And so I did that, and first I was for a year I was at Telex. We had about 10 Telex machines, got the prices from all over the world through Telex. And then eventually I graduated to be able to sit on the main desk and do the phones and the brokers, and was very, very profitable, that trading at that time. And the person in charge who hired me, he was probably the most famous guy in trading at that time. And so one day he said to me, you know what, I took you out of hockey and you have so much talent. They look for a chief trader in Citibank Tokyo. So a month later, I was on the plane to Tokyo. and walked in the bank there in Citibank, and you know, my English was not you know, that perfect, and of course Japanese nothing. And it was like in 1978 I was in Tokyo and managing the trading room of Citibank Tokyo, which was much smaller than the one in Zurich. But over 1.5 years, you know, I got big help from the Zurich office, and somehow I was able to make a big profit for Citibank in Tokyo. And then, of course, New York got wind of that and said, "Oh, this is guy in Tokyo from the Zurich office. You know, why is he in Tokyo? He should be in New York." And I got a phone call after 1.5 years on a Friday, and they told me they want me to be in New York on Monday. And I had an apartment and had a wife then. Wow. And so I went 3 days later. I flew to New York, and I was like number 2 there in the trading room, and we built it up. And I also built a gold trading desk at Citibank New York. And I stayed there for about, I would say, 79 to 83. I stayed there and traded, and Citibank New York became much bigger over time and got more sophisticated. And then the chief trader of Swiss Bank Corporation at that time we became good friends, and we decided that we should leave the bank and start like a trading company. And so we started probably the first hedge fund in the world, 1983. I started it. He came a year later, and I remember we were sitting in the office. In the beginning, we had not one client, but then we knew for some people in Europe they wanted to give us some money, and eventually what we got was a $10 million loss limit, which was huge at that time, and the size of trading was up to us. We just were able to risk 10 million. It was managed by UBS. The loss limit was managed by them, and wow. So we traded that money and did extremely well. The swings at that time were just crazy. 5-6 big figures in the dollar, you know, the Deutsche Mark, the Swiss franc, every day up and down. So you were able to lose a lot of money or make a lot of money. And in the end, for us, you know, we did well. I remember in the first year, we made about $30 million profit in 84, and I know in the middle of the year, unfortunately, we were not too smart, and then we gave back another $12 million. In the end, we made some money, but not that much. The second year was about the same, a little bit bigger. We made, so these clients were very happy with us. And then that was about, then another partner joined us, my dear friend, Brad Westerfield.
And that's the gentleman that was in the $1 billion day with you.
Yes, he was in the $1 billion day with me, with us, and we are very, very close friends. And then we traded very successfully until 1994. And then for me, that was 20 years of trading. And at that time, because you had so many moves overnight, basically it was like a 20-hour business a day. And we got so tired of trading in 1994. So we had about $150 million under management at that time. So we decided to close the fund and just take a break and see what we want to do. And just was too tired of trading mentally and physically, and just needed a break. So we closed our fund. And then I had a friend who, and I said to myself, I should try something else than trading. I had enough. I did well. I had a very good living. I made good money. I should do something else. And so with a friend of mine, we started a shoe business. We did Gore-Tex boots, First year we sold $6 million worth of boots, and second year we sold 11 million. But then it was very difficult to get the money from the clients, or we had cancellation, and the whole thing became a hassle. And I said, this is not for me either. And I went back to trading, and you know, just my own money, and had a couple of friends that gave me money, and so I was like basically sitting in my pool house and trading and trading $20 million, something like that, with a couple of friends. And I met, and I was very happy with my life, and I thought that I'm never going to go back into big time trading, and I'm happy to manage my own money and some of my friends, and was really happy. And then I met my friend and partner, Philip Gallos. He was trading at that time at what do you call it, at AIG. And he was like a big currency trader there, and we became good friends, and he started to manage some. I gave them some of my friends' money because I really didn't want to do that anymore. And then after a year or so, you know, he basically wanted to start a fund, and you know, he asked me. I said, listen, can you not come out of retirement and we can do it together? You did it already once, and so you know, we were very you know, like interested both in the trading, and so I said to him, okay, let's start. I do it for 6 months, maybe a year, and then you're on your own. And so, you know, we started TradeX currency fund, started with about $50 million. And then I was more like on the fundraising side, because we wanted to build up big assets. And we ended up, after many years, not many years, like maybe after 5 years, we ended up managing $2.5 billion. And so we had a pretty big operation. Omar Sadiq joined us. And so we had a concept, and that's very interesting, you know, like, because we got bigger and bigger, we thought we need some other currency traders to help manage us the assets, because it was too big basically for us alone, and especially Philip, to manage all these assets. So we started to allocate like 30% of our assets to other currency managers. Now, unfortunately, pretty much nobody made any money, or they made, or they gave it all back. And so we were just talking about it, that maybe we have hired 30 to 50 traders, and really nobody made any significant money. Most people lost, or most people were flat. You know what I mean? And so
so you were like a fund of funds at that point.
Yeah, we were a fund of fund, but you know, we only allocated out very small part, like 25-30%, and the rest of it was managed by us, or mainly by Philip Gallos. And I get back to Philip Gallos about him a little bit later. But we were very discouraged that nobody made money. And funnily enough, today, from all those traders and people we gave money, we believe that nobody's in business anymore. So all these currency funds, all these people managing currencies, they disappeared, and so we were ending up basically, we had to let them go, and we had like $2.5 billion to trade, and we did that until 2011, and we never had a losing year, which is unheard. We started in '99, and we closed the fund in 2011 without ever having a losing year. And you know, I have to thank Philip Gallos, because he was trading excellent for us, and every year turned out the performance. And but it was just too much money, and we decided to close the fund in 2011, and we started a private partnership between Philip Gallos and Omar Sadiq and myself. and we are managing that partnership, and we have a few traders, and luckily one of them is Blake Morrow. Very tough to get, but he's with us now, and so that's what we are doing. I'm still trading every day. If I'm around, I take more time off, and I'm actually, like, when I look back at my career, I'm very surprised that I still able to make money. Based that on my experience and being very flexible. I think right now, since maybe the last 18 months, 24 months, it's the hardest ever to make money. Very few people make money. There are very few traders left who can make the big money on a discretionary basis, because the algos are on every bid or offer, and volatility is not what it used to be. It's always a little bit depressed, and when you look at the moves we have on a yearly basis on a euro or so, is like really nothing, and it's so difficult to make the money, and one has to be very smart to how to look at the market, and I have some maybe down the road later on today. I can explain what I think is very, very important to be successful, and what people should not do, because if you do it the wrong way, it's impossible to make the money.
And that's exactly what I think everybody listening in wants to hear. How people have what you've seen and what you have experienced, that you can think that how people can be successful. But before you get to that, I want to talk a little bit about Philip Gelos, and who is also known as FX Macro. If for those of you that don't that don't follow him, he is and fortunately I've had the great pleasure of trading for Ronnie's firms now for the last 2 years. It was a different firm, and I went over to Gelos last year, or this. It's actually been about a year, almost to the day. And I've had the pleasure of meeting Philip, obviously, in person, and trading with him. And he is, I would say, in my experience, the most awesome trader. But what do you think, Ronnie? What characteristic do you think sets him apart from any other trader you've seen? And I know you'd probably say that he's one of the best, if not the best trader you've ever met in your life. But what sets him apart? What makes him different from everybody else out there?
It makes him different. Like I said, I explained, since 1999 we trade together. And basically, every day, we talk about the trading. We see what we are doing, and I can only mention one word, which makes him better than anybody, and that's discipline. I have never met a human being with that much discipline. He made, in 20 years, I never saw him make a mistake in trading. I'm not talking about being wrong on the market or taking the profit too early. Of course, those things he did too, and he does, and everybody does. It's it's no other way. But in his entire trading career, he never had a loss which, like, let it go, or he let the ego get in his way and was sitting on a bad position, or had some wishful thinking. I never saw wishful thinking with him. I never saw ego. I just, whatever stop loss he had, he never changed it, and he had the best money management from anybody, and that's why he is probably the most successful currency trader ever. The way he approaches the market. And the other thing, what I have to say, and that's my personal opinion too, the trick is not to trade. to sit there and be able for 3 days to sit in front of the machine and never do a trade. He can do that every week. He can do it whenever he likes. He's there concentrated. He watches. You know, he leaves the office. He does his fitness, but he can.
And he's in great shape.
He can sit there for 1 week and never do one trade.
And you know, I've sat there and I've watched him, and he, you know, we're all wrong, Ronnie, and we all make mistakes, and we all make bad calls in the market. It's part of our business. But he does, when he's wrong, he'll bite it. He'll take a small loss and he'll move along like it never happened, and he moves on to the next trade. And it's really fascinating and awesome to watch at the same time. And how many of us, and I'm speaking for the majority of the listeners here, how many of us have gotten in a position and say, you know, oh my God, you know, this trade is just not working for me, but I think with this happening, it's gonna come back. And we've all been there. I mean, we've all been there, but to watch somebody do it on a really next level, more so than many of you could even imagine. And I'm saying that because I know the numbers. It's really quite staggering to watch and very amazing to watch.
You know, when I look back, right, from when I started in 1974 until about 1988, something like that, there was no really charting. There was nothing, you know, it was more like flow trading, and it was just like always a little bit like the Wild West. You had up and down every day, up and down. So when you were wrong in the morning, you had time in the afternoon to make the money back. And today, when you're wrong, you're wrong. You know, it's different. But at that time, you know, it was interesting. And then later on, the CTAs like the John Henrys and all those guys, a lot of CTAs, you know, started to trade, and you know, they in the beginning, I remember moving averages was the big thing. Everybody programmed these moving averages, and like that's how John Henry started. And then over time, they became more and more sophisticated, and that basically went on for 2 years. You know, and then of course you got charts, and then you know, and then. That happened until about 2010, 2012, and then the algos started, and one algo, two algos, you know, and I remember jump trading from Chicago, those guys, and more and more of those guys started in the last few years. Since 2 years, 3 years, we have artificial intelligence, a combination of that plus the algos. That's why we are now in such a difficult situation as discretionary traders, you know, with this depressed volatility to make money. It's very difficult. And that's why I can only stress, you know, if I would say two things, discipline is the number one. And for me, don't trade, you know. That means, you know, most people cannot sit in front of the computer and just watch it, and they all, you know, after 3 hours they think, oh, I see something, and they jump in, and it's just because they wanted to put the trade. There was really no trading plan, there was no stop loss planned, and you know, and that's how they lose money. Yeah. And don't make it. And you really have to wait for your you know, for a setup. You have to have the money management in place. Before you do a trade, you have to look about how much you want to risk, where is the stop loss, can you afford it, how sure are you, and then you can put the trade in. And the minute you put the trade in, you put the stop loss in. You know already what you lose, and you're gonna comfortable with it. And it says it's 3% or 5% from your capital or 1%, it doesn't matter, but you have to stick to that. And there is no ego, and you just have to follow the rules, and you can never ever step away from those rules. You have to stick with it, and you know, and when you have a strategy of buying dips and selling rallies, more or less, and trading the news combined with charts, you will make money. but you can never make one mistake, because the one mistake could cost you the whole month. And that's what, for me, is the most important to be a successful trader.
And you know, I feel very fortunate because Ronnie and I we dissect my trading all the time between him and I have the luxury of spending the time with you to go through all, you know, because I make mistakes just like any other trader out there, and we talk through it all. But one of the things that I've let me take a step back and point out the fact that Ronnie, you are a really awesome trader. I know you give a lot of credit to Philip Gelos, but man, I've watched you over the years, and you are awesome at what you do. And don't let, and for those of you listening in, don't let him fool you like he doesn't know what he's talking about. No, he knows exactly what he's talking about, and he's really, really good. But one of the things that I've noticed about your trading, and one of the things that I think make you so awesome, is you are Dale, coach, Dale Pinkert, who does our webinars and all of our interviews normally, he always calls it intelligence gathering. You brush shoulders with some of the greatest minds in the markets, and you're constantly on the phone, in touch, emailing, talking to your network of traders, feeling everybody out and understanding where the market is and the sentiment of the market. So how important is that to you as a trader? Because I've seen you in action, and I see you, networking, and I get a lot of the research that you find, and how much does that play into what you're doing personally on a daily basis?
It's very important, and for me, you can look at charts, you see the pictures, you see trend line, you see head and shoulders, you see godly patterns, you see whatever you want to want. In the end, it's meaningless, just concentrate on that. You have to concentrate on the actual market, on the psychology of the market. For example, there's an event like 2 days, 3 days. We have an event now this weekend. We have another important event December 11. You have to know those events. Before those events, you have to figure out the psychology of the market. First of all, you have to know what the positions are. Are the markets more? Is the market more short? Is it more? Is it neutral? Or what's the opinion? What do the people think? And then my strength is to, for example, 2 days before an event, I try to figure out where are we going to be before the event. Do the people have to take the position back? Do they have to cover? Or are they very confident that it goes one way and they will take the position beforehand? And when you figure that out, then, you can buy the dollars or sell the dollars based on your feeling, based on positions. And actually, at 4 o'clock in the afternoon, the day before the event, you can take the profit because you analyzed it correctly, that what the market is going to do pre-event. And I think that people should do that more than anything else. Because after the event, you get different news, the market gaps, and you can't play anymore, right. And it's too late. So I rather try to make the money before, and then after. I think it's easier. So that's
and I'm sorry, I didn't mean to interrupt, Ronnie, but that's, positioning, and I've watched it with you, is so important. And you just made a key point about, waiting for those events, trading around the events. And it's something that, we try to talk about here every day that we do our free webinars, is how are people positioned going into this, whether it's the jobs report or the G20 or into Brexit, and knowing we know the market's extremely short. So what happens if they pass the vote in Parliament? Those are the types of things that you, as a trader, you have to be completely cognizant of. And one of the things, and I have to say this because I laughed at it, because I watched your $1 billion day video 2 days ago, and I think I told you this yesterday, but I watched your video from 2 days ago, and it's funny because knowing you for all these years, Your mannerisms are still the same. You talk the same. You talk about the same things. So there are a lot of things that don't change. And one of the things that you said actually in the $1 Billion Day is, I was sitting here waiting for the cable. I think you were talking about the pound. I've been waiting for 3 days for it to get to this price, or maybe it was your assistant that said that, or maybe it was your partner Brad. But that's so very important in these markets is, understanding the positioning, understanding where you want to be, and where the best risk reward placement is in the market at that very moment in time. Would you agree?
I absolutely agree. For me, for example, right, like I like to look at charts, like in our office, besides you, Blake, I'm probably the guy who looks most at the chart because I'm used to look at the chart. I understand the charts. Yeah. And of course, when I listen to FX Analytics, they have like other tools in charts, which I didn't know before. Now I learned that too. But, the chart for me, you look at the chart and it's very different. You look at a 5-minute chart, you look at a 15-minute chart, 60-minute to 40-minute. Now, something very important, and I saw traders making that mistake all the time. So let's say I'm a trader, I like divergences, right? Positive divergences, negative divergences. But this is a very bit different picture. You look at the 15-minute chart, look at the 60-minute, 30-minute, 240, and all of a sudden, like let's say you're a 15-minute chart trader, and then the divergent picture didn't work for you. Then you go to the 30-minute, and then you say, okay, I still can hang in there. I'm still okay. It's negative divergence, but that doesn't work. And then you look at the 240-minute, and the divergence is still there. But in the meantime, the dollar moved 1%. And the divergence never came in play. And that's how people lose money. You have to always know, are you a short-term trader? Are you a 1-day, 2-day trader? And then, which chart do you use? And when you make your assessment and your trade based on a 15 or 30-minute chart, you have to stick to that chart. If that picture doesn't work, you're out of the trade. You can't just always say, okay, I have a chance. I'm looking at the 60 minutes. I'm still in the game. And then I go to the 240, all of a sudden you have a big loss. And the play never happened. It happens maybe 4 days later. And I think a lot of people make that mistake. And I think a lot of people make mistakes by buying breakouts, which usually don't work anymore because the algos go immediately the other way. So I always feel that, when you trade and you really want to be careful, sometimes for me, it's better to log into a position or leg into a position in 2 parts. You do here a little bit and you do there a little bit lower if you want to buy, and you know where the stop loss is. And if you are right immediately, you buy and it goes up, you don't add. You just wait to your target, take the profit, so you made money on half instead of a full position. But that's the way to do it. I think I really like 2 amounts, like to trade. Like you buy here a little bit and then lower, you buy a little bit. You figure out, maybe you work with some Fibonacci numbers, and I know where the stop loss is, and that's it. And
and if you're wrong, you're wrong.
Huh?
And when you're wrong, you're wrong.
When you're wrong, you're wrong. But it gives you a better chance. It gives you a better chance. Sometimes, when you look at the level now, you want to buy here at 113.48 in the euro, maybe the euro could trade down to 113.10, so why not buy here half? And when it goes to 2025, you buy another half. You put the stop at 112.95. And you hope for the best for the G20 meeting. I suggest that you don't do that, because right now, for me, that meeting is 50-50. And I would not take any position right now if I didn't have it from before, like after the Powell talk. Yeah. If you bought it then immediately, and you are bullish and risk on, you should keep the position. But right now, if you don't have a position, I would not speculate for the G20 meeting right now at these levels.
Yeah, it's a coin toss. It is, and you know, Ronnie, we were talking about something else privately ahead of this interview, and one of the things that we talked about is, you know, these algorithms that are in the market, which is obviously a very big. They know exactly where. They know exactly where that fib level is. They know exactly where the trend line is. They trade around them. They try to, you know, get you in, get you out, you know, through those numbers. But when you have a good macro theme and a good reason to be long or short dollars or euros or whatever the currency is, does all of the technicals get thrown out of the window at that point? What do you believe?
Yes, I think we spoke about that, Blake, because I think those are the situations where you know, you always have to look at the fundamentals, and sometimes maybe even at the times we have right now, I think the fundamentals are more important than the charts. And the charts are always helping you to know where you were and where you are right now. And then the fundamentals, you know, if they're strong enough, if an event or news happen, you know for sure it's going to go, and then you can't wait, you know, for a trend line to be broken. You have to go in and go with that. And when you did the right analysis, those are the times where you have to take a little bit of bigger position, because that's the time to press. And when you make those moves, like the one with Powell, if you are quick with Powell, that's the best example I can give you. I had no position, but I before Powell's talk. But then when I heard what he was saying, I bought immediately Australian dollar. I bought the euro, and because I thought that was very important, like super important, and I bought like triple than what I normally do, and that made my entire months, because the months, all the days before, I thought were very difficult. I didn't do much because I like to sit there and do nothing, and because I never saw anything, and that's basically, this Powell trade was my profit for this month.
Yeah.
But I had, you know, I had the guts to go big, and it made sense, and nothing to do with charts. And now here we are in the middle here, from the top, you know, from where we were, you know, right in the middle. There is nothing to do here. There is nothing. Everything you do right here is 50-50 trade. That means you shouldn't do it.
There, and those are some very wise words for the trading community, Ronnie. I know we've been going on for about 45 minutes, and I'm going to hold questions for today as much as I'm sure people would love to just, you know, barrage you with questions. But what I really want to say to you, Ronnie, is you've been an absolute inspiration to me, and I'm so happy that people and traders around the globe are going to, you know, they're listening to this interview. They're going to listen to your interview for years to come as we put up the recording. It's an amazing amount of knowledge and experience that you have been able to bestow onto the trading community. Is there any like last comments that you'd want to make that maybe you were like, oh, I really wanted to talk about that, or anything else that you'd want to discuss? Because just having you here and being able to talk about the things that you hear from other people, but hearing it from somebody like you really resonates, I think, with most.
No, you know, the most important thing, and if I can be helpful to, you know, to all the traders listening and you know, and trading and struggling, and you know, because everybody struggles, because these markets are extremely difficult, and I just want to stress that what I said before, the number one point for me in trading is discipline, and you have to have a plan. And the plan is is not thinking about the profit. The plan is how much can I risk and where is my stop, and be very smart about it. And where do I need to take the profit, which is the nice thing, to take the profit. But I'm much more worried on every time I trade. I'm really worried about the loss. And, you know, should I do this trade? Should I not do it? Did I do the correct homework? Fundamentally, does it make sense, that trade? You know, and how big should I do it? Is it like, you know, I'm 100% convinced, I'm 50% convinced, or should I not do it? I think everybody has to be so disciplined and think about those points, and really look at the dollars you're risking, and then say, yes, I'm ready to do it. I like it. I have all my reasons, and I do it. And then you have a chance of making money. If you don't follow those rules, over time, you will not make money. And that's basically what the big message I can give to anybody who trades.
Well, thank you so much, Ronnie. And I like I said, I can't express my thanks enough for having you here today and being able to share your knowledge and your experience with everybody in this community. And you, as I know you don't know it because you're not you don't have a social media presence, but you as a person have made a huge impact on traders around the globe, as so many traders have watched your documentary and for years. And I have to leave you with one last question. So whose idea was it to do the shower scene in the BBC documentary? Was that your call?
You laugh about it. They had a woman producer, and it was her idea.
Oh, I wonder why.
It was her idea.
You're still as slick as you were back then, Ronnie. You are now. I love the heck out of you.
My wife was not very happy about that. But it was all fun. It was all fun in the end, and it's a pleasure. And whoever listens, you know, look at our you know, our tweets on Twitter, like FX Macro. That's mostly you know, Philip posting IDs and you know, trade IDs, and I think it's very important to see what he does and says.
And he doesn't do it for anybody's benefit. He does it because he's sharing this knowledge. It's, you know, and he's got great ideas. He's got great ideas.
Yeah.
Really does.
You know, and sometimes you see, sometimes he comes out with an idea and he's a little bit early, and then the next day it really happens. That can happen to anybody, but overall the ideas I think are excellent, what he posts, and people should read it, like when he, you know, and during events, and you know, ideas, you know, on all different markets. I think it's interesting.
Yeah, well, there's many things that have been pouring in from the listeners, and personally, I just want to thank you once again, Ronnie. You're an awesome individual, and I hope everybody is able to take that away. Not only your knowledge, but just the fact that you're such a great person. So thank you so much for being with us today, Ronnie.
Thank you. Bye, everybody. Have a nice weekend. Okay.
All right. Good luck. Thanks, Ronnie.
Bye.
And guys and gals, this is Blake Morrow with Forex Analytics. I hope you enjoyed today's webinar, and remember, it's going to be recorded, so you guys can go back and listen to it whenever you want. And good luck this weekend. Hopefully you stay safe over the G20 weekend, because we don't know what's going to happen. So have a great weekend. I'll see you on Monday on the FACE webinar with Dale and Steve and Stelios and the rest of the team. Have a great one.